Today we're here with Caribbean economist Marla Dukharan to take a look at the Trinidad Tobago budget for fiscal year 2020. Last year the budget was themed turnaround because the Minister of Finance indeed said the economy had turned around. Now in the fiscal year 2020 budget, the minister acknowledged he was wrong about that and the economy in fact did not grow in 2018. The 2020 budget is themed stability, strength, and growth. But before I get into growth, Marla, I know a lot of folks have been asking you for commentary on one particular measure, which is the VAT refunds that the minister announced will be paid in bonds instead of cash. So let's start off with this today, Marla. Welcome and thank you for having this discussion here with us today. What are you seeing is behind this decision?
Yeah, thanks, Melissa. So we have VAT arrears at around 3 billion TT dollars, right? That is a significant figure. And the Minister of Finance is proposing that those who are entitled to VAT refunds will be given bonds, government bonds, that are the coupon rate is 1.5%. I think this is absolutely unfair. Again, this is another blow to the private sector, to the non-energy sector, who are due refunds for several years and cannot get these refunds and are now going to be given an instrument that is, yes, tradable, but when you put a coupon of 1.5% and the market rate is somewhere around 3% or more, then it means that these instruments, you will not get par if you try to sell. So you will lose money. So you will not get 100 cents on the dollar when you try to sell. In other words, let's just say you might get 90 cents or 80 cents. I'm not sure. But the point I'm making is that it means that the private sector businesses, small businesses, who need access to their cash will take these bonds and sell it on the open market and will get less. So in other words, they're taking a haircut on the VAT, on the tax refunds that they are owed. And I feel like that's already an admission by the government that it has not managed its fiscal affairs in a prudent and sustainable manner. Because any government that cannot honor in cash its tax returns is broke as far as I am concerned, because you're receiving tax returns in cash, but you have to pay tax refunds in bonds, then you are broke. And that is one of the key things that was, to me, shocking in this budget, that the government has admitted that it basically cannot come up with $3 billion to repay and to refund these VAT refunds.
The minister said, Marla, the words of the budget are, the government simply does not have the free cash flow to address, talking about the VAT arrears.
The government does not have the free cash flow, so it's broke. That's what I would say. This reminds me so much of Barbados back in, let's say, 2015 or so. And what the government here then in Barbados resorted to doing is printing to pay, well, to a certain extent, to pay any of its bills, but including tax refunds and salaries. This is an admission, and this is striking to me, and I don't know that people saw it this way, but if a government does not have the free cash flow to honor VAT returns, then you're broke. And that is not a reflection of fiscal responsibility and fiscal resilience. That is a reflection of gross fiscal mismanagement.
Marla, you were estimating growth of 0% for last year, which turned out to be exactly what happened. And it was not the turnaround that we were led to believe in the last budget. Now, this budget is called Stability, Strength, and Growth. What are you seeing in terms of growth? What are you hearing from the private sector? And how do you feel things are going to play out this year?
The funny thing about that comment he made last year about the economy has turned around and was projecting growth of in the vicinity of 2%, say 1.9 or so, projecting or estimating, as the case may be, for last year, and then we've had a revision basically to zero, just goes to show how unrealistic in the first place all of these projections are. And it's shocking to me that we continue along this line. So I in fact feel like this year, as in 2019 calendar year, and next year, as in 2020 calendar year, I think that on average we can expect to see at best 1% growth this year and next. And the reason I say that is for a few reasons. One, we still have Petrotrin being an unresolved issue. Yes, it's been quote unquote sold to the Oilfield Workers Trade Union, which really wasn't a sale because they're not paying anything for it, at least not upfront, which is the word that was used in the press release, but is not in fact the case. We have that unresolved issue, and then we also have the fiscal drag. Now, that's actually something I want to talk about a little bit, because when you look at an expansionary fiscal stance, meaning a government spending more and incurring deficits, the reason that they usually, which this government and this Minister of Finance had articulated, the reason for that is because they want to promote growth and they want us to create a certain level of economic activity, and they don't want to destroy economic activity, etc., etc. But we've had fiscal deficits for the past 10 consecutive years in Trinidad and Tobago. The last time we had a balanced budget was in fiscal 2009. And in that 10-year period, the average growth rate for the past 10 years was just about zero. It might even be just slightly below zero, but let's just say zero. And so I'm saying that to say that the fiscal deficit spending, fiscal stimulus doesn't work. And why should I expect to see growth this year and next year just because the government is continuing to spend more than it's earning? I do not believe that that will materialize, because the fiscal drag itself is creating less growth. And again, as I mentioned, the whole Petrotrin issue that is still unresolved. So I feel like growth this year and next year will average 1%, and we will not get anywhere near the kind of growth that the Minister of Finance was projecting.
Okay, and so those growth rates that he talked about in the budget for the coming years, we're looking at over 4%.
Yeah, he said 1.9. So the 1.9 that was originally supposed to be in 2018 then got shifted to 2019. Now it's gotten shifted to 2020. And then he's projecting 4.1 in 2021. 4.1? I mean, really? The only countries that are seeing growth anywhere near that magnitude in this region are the Dominican Republic, which is a very dynamic and diversified economy. Grenada is showing not quite that high, but on average, really good growth. And Guyana, simply because they've found record number of barrels of oil. So I would love to know on what basis is he projecting 4.1% for 2021 and then 3.6% for 2022. To me, those projections are as baseless as they were before in previous budgets, which materialized to be quite incorrect.
In the 2020 budget, the minister said the return to growth reflects an improving global economic environment and an expansion in the production of oil and gas. So let's talk about oil for just a minute. In last year's budget for fiscal 2019, the minister talked about how the current government had weathered the oil price shock that began in 2014. And we've heard oil prices time and time again as the scapegoat for low growth. I'm going to read a few statements from the 2020 budget talking about oil prices. The minister said, in fact, oil prices, which averaged $95 per barrel in the 2011 to 2014 period, began a severe decline from mid-2014, reaching a low of $26 in 2017. While there's been a modest recovery in prices since 2017, with oil prices reaching an average of $65 in 2018, oil prices dropped again in 2019 to an average of just $57 for the year so far. How does oil really impact the economy? What are the facts on oil prices, and what do you see as the implications of this lower oil price environment?
So in the first place, let me just share some data on what actual prices for oil look like. So oil prices reached $26 per barrel during 2017, but they averaged just about $51 during 2017. And the
Okay, so the
average
$26 was like the low point for the year, the low
right
point during the year. Okay.
during the year, but it's really an average of $51 we're looking at. And the average price from the year 2000 to 2017 was actually about $61.85, so close to $62 a barrel. So 2018 was actually 5% over the average for the century so far. So it's not that much lower as he would like to suggest. But the other thing, I think the more important thing to note about all of this is, first of all, I have no idea why we use the oil price as any kind of benchmark or basis upon which to arrive at a revenue figure in our budget. Trinidad and Tobago had been a net oil importer for several years. And now that we are no longer producing refined products based on the shutdown of Petrotrin, I would love to know how this is relevant to us, because we would have imported oil in order to run the Petrotrin refinery. About half of what was needed to run Petrotrin was imported. And so it's misleading. And I feel like this oil price is used to explain what happened, which had nothing to do with the oil price, if you know what I mean, in terms of the revenue number. And I think it's also used mistakenly to set a revenue target that then feeds into the formula that decides how much if you deposit money into the Heritage and Stabilization Fund. So I think all of that needs to be reworked. I think it's no longer, the oil price that is no longer as relevant as it used to be, and certainly in the context of a Petrotrin shutdown, and in the context of that whole dynamic changing, where we used to be a net oil exporter, and then we became a net oil importer. All of that whole context has changed, and I feel like we haven't adapted to that change in this scenario. And so that's one of the things I want to highlight with respect to the oil prices. The other thing I want to highlight is production. And so since Trinidad had peak oil production in 1978, we have been declining steadily, secular decline in oil production since 1978. So oil prices, again, are losing their relevance in terms of our revenue, in terms of fiscal revenue, and in terms of export revenue. So I do not understand why there is this undue emphasis on the oil price, and that needs to change.
Okay, well, what about natural gas production? I'd like to talk about that as well, because the natural gas is more relevant for the economy, and also
Of course.
because when we saw in the budget, the minister projection for production this year, 3.8 billion standard cubic feet per day was 2019, is what he said this year. If you could just comment on this, this sounds to me like similar figures that we've heard in the past. And so we're now hearing 3.8 for 2019. I remember hearing that same figure in the last year in the
2018.
exactly. So just, what do you know around this, and kind of what's the sense that you're getting as far as natural gas production goes?
Okay, so what he said was, as such, natural gas production has been increasing, reaching in 2018 an average of 3.63 billion standard cubic feet per day, which is an 8% increase over 2017 average of 3.36. He said natural gas production has continued this upward trend and is projected to reach an average of 3.8 BSCF per day in 2019, thereby bringing natural gas supply closer to the peak demand of 3.9 to 4 BSCF per day, which is the level of supply that's needed to keep our petrochemical plants and LNG trains for example, at optimum operational efficiency. But I mean, to your point about previous figures, last year's budget, he had said gas production has been increasing with an annual average of 3.8 standard cubic feet per day in 2018, and his projections were for 3.94 billion in 2019, 4.05 billion in 2020, and 4.14 in 2021. So those projections that were in the last budget seem to have fallen away in this budget, because he spoke to 3.9 to 4 being the projection for this year. Now, I have a feeling that that might be linked to the fact that the law on manatee and the gas deals basically with Venezuela haven't materialized. And that, I think, was the basis upon which in the previous year's budget, 2018 budget, he might have suggested that these figures would have, these production figures would have strengthened. So I'm just speculating here and I'm just guessing, but certainly it would appear that these projections of getting to 4.14 billion by 2021 have fallen away. And so that suggests that the growth, which, I mean, any growth that we saw this year and last year were largely based on some of the increased production based on juniper and other fields that came on stream, right? And when I say growth, I mean simply the GDP impact, not the overall economic impact, right? And so, again, if these natural gas production projections that he announced last year have fallen away because he did not reiterate projections like that for this year, then on what basis are we going to see that close to 4% growth that he projected? I'm not seeing where it's coming from, and so it's really a disconnect there for me. And there was no explanation as to why those natural gas production projections have in fact fallen away.
Okay, I want to switch gears for just a minute, and I want to talk about the exchange rate. The minister actually said, I'm going to read this textually because I think it's important. He said, notably, the creation of credible and confidence-inducing conditions for eliciting savings and investments required the adoption of a stable exchange rate supported by an appropriate use of foreign exchange reserves as the country transitioned to a lower horizon of growth and prosperity in the context of lower revenue. Now, the words that I want to point out there is that he talks about the adoption of a stable exchange rate. Now, I think that what he means is the adoption of exchange controls. So could you just comment on that a little bit?
So the exchange controls have been adopted and steadily increased since the last administration, right? When the central bank, for example, had asked the licensed broker dealers and so on to produce invoices justifying their demand for foreign currency or their bids, for example, for foreign currency out of the injection. That's a foreign exchange. That's a mechanism of control. And the IMF found Trinidad and Tobago to be operating foreign exchange controls and a dual currency system. And I think it might have been their 2016 Article 4. But the point is that this is in fact the case, that we have foreign exchange controls which are in contravention of the IMF Article 8, which we are signatories to. So what he's saying here is that confidence-inducing conditions require the adoption of a stable exchange rate. What it means is that he has adopted completely pretty much what a stable exchange rate is, a fixed peg, right? Whereas Trinidad is supposed to have had an exchange rate that allows for some variation. We used to have an auction mechanism where the central bank, in doing its injection, will take the bids from the licensed broker dealers and And so the exchange rate had some variation and market determination in it. Now, what he's saying is that it's a policy decision. The exchange rate is a policy decision. So when people ask me, well, where do you think the exchange rate is going to go? I'm like, well, ask the Minister of Finance. It's a policy decision. It's not a market-driven decision or a market-driven outcome. So yes, we have officially adopted foreign exchange controls, and we have officially been reported on it by the IMF.
One of the other things I just wanted to point out is within the achievements that he lists, one of the things that he points out is a long period of exchange rate stability. And it sounds like what I'm hearing from you is that it sounds more like exchange rate controls have been applied.
Fixed
more than
exchange rate.
stability.
Yeah,
Exactly.
it's not stability. If you have a peg, it's not, you can't call that stability. It's a policy decision to have the exchange rate at a level.
Is there still a black market in Trinidad?
You know, just yesterday I had lunch with one of the partners from one of the big four in Trinidad, and he told me he's aware of a transaction that took place at 8.5. I was surprised. I hadn't heard 8.5 for a long time. I was hearing 7, 750, and 8. I haven't heard 850 for a long time. So no, to answer your question, there is most definitely and this was a large sum of money. There is most definitely a thriving black market in Trinidad and Tobago. And that thriving black market is a direct result of the policy decisions and the policy stance of the authorities. They've decided to carry an overvalued currency and maintain an overvalued currency, which, by the way, is a subsidy. It's a government subsidy because the central bank can sell foreign currency, presumably to the market at, let's just say, $8. Let's just say, I'm just putting out a figure there. I don't know scientifically what that figure is. But let's just say the central bank were to say to the broker dealers or even to the general public, I have US dollars here for sale. Tell me how much you pay me for it. They will pay over and above what the official exchange rate is, which means that the government is foregoing revenue by selling those US dollars at the current exchange rate. So it is a subsidy, right? And in subsidizing and carrying and maintaining an overvalued exchange rate, what you are doing is you are subsidizing imports by extension.
And creating distortions throughout the economy as well.
Of course. And by subsidizing imports, what you're doing is creating an environment of unfair competition to local producers. And you are also, by extension, penalizing exporters because the exporters are facing a currency that is more expensive in terms of the local currency being overvalued than it ought to be. And so their exports on the international market could have been cheaper at a lower exchange rate, but because we have an overvalued currency, the price the exporter can charge is not as price competitive externally. So the exchange rate, what he said on the exchange rate, he said a long period of exchange rate stability as well as stable and low interest rates with regular injections has facilitated private sector investment decisions. No, what it has done, it has steadily eroded the non-energy private sector. And it has not encouraged greater development and growth of the economy. It has most decidedly not. And so this is a complete misrepresentation of what is actually happening with respect to the exchange rate.
Okay. I'd like to get into the budget itself right now and take a look at, we'll start off with expenditure. And one of the things, I'm going to read something that the minister said so we can kind of discuss this. He said that referring back to 2014, which was the highest point historically for government spending. It was just a massive, grotesque amount in 2014, which was not something that had been repeated over a decade or over 20 years. It was that year was, I believe, the largest figure in history. He says he's talking about
Almost 63 billion TT dollars.
yeah, he was talking about that the reduction in expenditure of substantial proportion from 62.8 billion in 2014 to 50.5 billion in 2019, or a 20% reduction. That's $12 billion less to spend to satisfy the expectations of our population. What are you feeling when you hear this? Could you just comment a little bit on you know, what do you feel the level, how do you feel that this 50.5 billion in 2019, is that a satisfactory level? Is that still too high? And in comparing that to the highest year in history, I don't know if that's even a relevant data point. Could you just comment on that a little bit?
Well, the first thing I would start off by saying is that in 2014, almost 63 billion TT dollars in expenditure was, by the way, while we were still borrowing, right?
Mm-hmm.
As I said earlier, the last time we had a balanced budget was in 2009. The last administration presided over the highest level of fiscal revenue Trinidad and Tobago ever saw and might even ever see again in real terms. And they never balanced the budget, never, even though they were getting around 60 billion TT dollars. So that level of spending, even then, was overspending, even though revenue was much higher. What I would say is, in response to his assertion that it's 12 billion less to spend to satisfy the expectations of our population, how does he know what the expectations of the population are? Who sets their expectations? Why are their expectations relevant to how much the government decides is prudent to spend? Human nature is such that I want more, right? And if I could get everything for free, then I might want everything for free. But that is not, that could be a desire, it could be an expectation, but that is not necessarily what the Minister of Finance, whose responsibility it is to maintain fiscal responsibility and a stable macroeconomy via his fiscal policy, that is not what he should be concerned with. He should not be concerned with the expectations of the population. And I feel like that is where you have a distinction between what a politician is and what a minister of finance should be. And so that I found was grossly disappointing, that this is the stance because we think that this is what the population expects. Now, I also would like to say that I don't agree with the level of expenditure this fiscal year that he articulated, which was higher than last fiscal year, and the deficit is wider as well. And so, how is that demonstrating fiscal responsibility? It is not. You're spending more and more over the past 2 fiscal years consecutively when your revenue is still well below your expenditure. If your budget was balanced and if your revenue went up, then fine, you can spend more and still balance your budget. But you've had a deficit, like I said, we've had a deficit for 10 years. So at what point do we decide to balance our budget? And so my answer to you is that no, I am not satisfied, because I feel like the government, yes, in bringing down the deficit last year, that lower than they had planned, was commendable. However, why not continue to be commendable and bring it down again this year? Why widen it this year? And I'm not, so that is why I'm not satisfied. And I'm not satisfied with the rhetoric of we have to spend this because this is the expectation of our population. I disagree that that's what should be relevant in this context.
Of course, and if it's based on the services that the population expects that the government will provide, if you look at the average over the decade prior to 2014, the level was 40.46 billion. So that's substantially,
Exactly.
it's 10 billion further below where
Where
he's
it is
putting us
now.
at for this coming year.
Yep.
So yeah, now he does refer to this in several occasions as a disciplined fiscal stance, as a fiscal discipline, as a
Yeah.
fiscally
Yeah.
responsible budget. The increase in spending year over year was 6%.
Mhm.
How is that a show of discipline?
How is that discipline? And it's just like I said earlier about that being a misrepresentation, just like the FX, it is a misrepresentation, and it's an improper use of the words responsible or restraint, or any of those words that he used. Just like when the press release on the Petrotrin sale to the OWTU said that they will be paid upfront a certain amount, and there was no upfront payment. It is a gross misrepresentation of what is actually the case. And so it's like, how Donald Trump has this strategy that he uses where, he labels people like Crooked Hillary and Low Energy Bush and Pocahontas, and it sticks in people's heads. So when you use these words like, exercising fiscal restraint or fiscal responsibility and so on, it sticks in people's heads because that is what the objective of the propaganda is, to get people to feel like that's the truth. And it sticks in my head that my Minister of Finance said that he was being fiscally responsible. And so that's what they get. That's what they hear and they receive. But they don't go behind what he said to look at the numbers.
Well, let's do that just now. Let's take a look at the numbers for the deficit. Okay, so could we just spend a few minutes talking about that? Budgeted for last fiscal year was 2.4% of GDP was the budgeted deficit. Now, how does that compare to this year? What are you seeing? What's the difference? Are we going up? Are we going down?
So in the
In our
first place,
fiscal, in our disciplined fiscal stance.
discipline, yeah. How is our discipline looking? In the first place, I do not like to look at the size of the deficit in the context of GDP or compared to GDP. And the reason for that is I think it is well acknowledged and recognized that we have a challenge with our statistics. And so that GDP statistic in the first place, the denominator, is not as reliable, I would like to suggest, as we would like it to be. I like to look at the deficit figure in its absolute terms, in terms of dollars. And so this fiscal year, the fiscal deficit is budgeted to be 5.3 billion TT dollars. This is as compared to last fiscal year of 3.9 billion TT dollars. So that's an increase of 34%. 34% increase in the size of the deficit. That is in no way fiscal restraint, fiscal responsibility. It is not. And the other thing I want to highlight is that some of the money that the government counts as revenue in arriving at this deficit is actually not revenue. It is financing items. So NIF bonds, for example, was counted as a financing item in last year's deficit calculation, right? So when they first projected the deficit in the budget. And so that understates the size of the deficit, and that's incorrect. It's just incorrect to do that.
When you say financing item, you refer to that they're actually incurring debt. Is that what you're? Okay.
Yeah, a financing item is when you have a shortfall in your revenue. In other words, you spend $5, but you only earn $3. It means you have to finance $2. You have to find $2 somewhere by borrowing it, right? If you did not have that $2 deficit, you would not have to raise any debt. So in issuing these NIF bonds, the government was not raising revenue, and they call it revenue, but it's not. It's a financing item. If you did not have a deficit, you would not have to raise these bonds. But I know they like to say that that's not borrowing, but it is. It is borrowing, it is debt, we do have to repay it, and it is not revenue. And again, I'm going back to, this is a misrepresentation of the facts.
Okay, let's talk about debt for just a minute, because the minister talked about the net public sector debt to GDP ratio leveled off at 62.1% and has remained remarkably stable since then, is what he said. He's referring to it, that was in September 2017. So we're talking about 2 years of stability at 62.1%, according to what the minister said. He said this is within internationally recognized benchmarks. What are you hearing about the benchmarks? How does this figure in?
Melissa, I don't know what benchmark he's citing there. I mean, he's an engineer. He might know what benchmarks exist, but in my world, as an economist, we don't have any benchmark that suggests that over 60% of GDP debt debt to GDP is acceptable. So if you look at a paper done by Kevin Greenwich et al. Some years ago, they calculated what debt sustainability thresholds were in this region. And they found that debt sustainability thresholds are somewhere around 55% of debt to GDP, give or take a little bit, right? So well below 60% is the debt sustainability threshold found by empirical evidence. The second thing I want.
Before we go on, can you just explain a little bit more? When you say the sustainability threshold is 55, 56% of GDP, what does that mean? That what happens after
Okay.
55, 56%?
Okay, so before you get to 55, 56% of GDP, when your debt is low, each additional dollar of debt has a positive impact on GDP, right? Each additional dollar of debt grows your economy, though at a decreasing pace, because the presumption is in the model that they use that at that level, increasing debt to fund, for example, infrastructure and so on, has a positive impact on growth. Once you get to the point of 55, 56% of GDP, that's a tipping point, and the relationship becomes negative. And so each additional dollar of debt actually has a negative impact on your GDP. And that's what I talked about earlier as fiscal drag, where each additional dollar of debt that is, and in other words, each additional dollar of fiscal spending that is financed by debt actually takes away from GDP. And that's the territory that we've been in Trinidad for quite some time. In addition to that measure of sustainability, there is also the primary fiscal deficit that we look at. And the primary fiscal deficit is the deficit that exists before you pay the interest on your existing debt. Some countries have primary fiscal surpluses. Barbados has a primary fiscal surplus. Jamaica has a primary fiscal surplus, for example. Trinidad has had a primary fiscal deficit since 2014. And what that means is that we're in deficit before the interest is paid on our existing debt, which means we're borrowing to pay the interest on existing debt. So that again suggests that the level of debt that we have, whether the minister likes to call it sustainable or within international benchmarks, whatever label he wants to ascribe, again, is a misrepresentation. By those two measures, the one being the primary fiscal deficit and two, the debt sustainability threshold as established by Greenwich et al., the level of debt that Trinidad and Tobago is carrying is already unsustainable and has been for some time. And by the way, the gross public sector debt to GDP is 75.6%. The net figure that he talks about, that he cites, had risen to 63.6% of GDP for June of this year. And that is the highest level ever. I mean, apart from, I think, back when we had an IMF program back in the 1980s. Okay, so I don't understand according to what measure is this level of debt supposed to be comfortable.
Certainly, and he does say that in the medium term that they expect the public sector debt will remain stabilized in the vicinity of 65. So he's actually seeing that it's going to increase.
It's going to increase. Exactly.
Which is not remaining stable. Increasing,
right.
Yes, increasing is increasing. So let's talk about the balance of payments. I want to switch gears a little bit here. And this is something that you've published several reports on this year. They're all downloadable from your website. But the balance of payments is basically we're talking about the inflows and outflows of foreign currency into the economy. So this ties into what we talked about already on the exchange rate. The minister said that there was a recovery in the current account of the balance of payments, which moved from a deficit in 2016 to surpluses in 2017, 2018, and 2019, averaging 5% over the last 3 years. That sounds like certainly a positive development. But how he only talks about the current account of the balance of payments, and the balance of payments has other accounts as well. So could you just talk to us about the balance of payments in general? How do you see things are trending?
Okay, so the current account really looks at trade flows, so imports and exports, and it also looks at remittance flows. And as the word current would suggest, short term, right? Now, it's all well and good to talk about a recovery in the current account of the balance of payments, meaning that we're no longer importing more than we're exporting, etc. As we did have a current account deficit, I believe, in 2015. But he neglected, to your point, he neglected to talk about the overall balance on the balance of payments. Now, the overall balance on the balance of payments, it is the sum total of all inflows and all outflows of foreign exchange taking place in our country, right? And if the balance of payments has a positive balance, it means that we've received more foreign currency than we've sent out, and therefore it means that reserves have expanded. Reserves at the central bank would have increased because we've earned more foreign exchange than we've spent. That has not been the case in Trinidad and Tobago for at least, I think, since 2014. We have steadily been losing reserves at the central bank. And that alone tells you that we have a deficit on the balance of payments. But I think what is even more important to note, because that's frightening, right? It's frightening that every year we're losing reserves. We're now at just, I think, just over $7 billion US dollars in reserves at the central bank, down from a high of somewhere around 12 to 13 billion some years ago. But what is even more concerning is that there is an item, a line item in the balance of payments called the errors and omissions item. And that item is your balancing item, where you look at the balance on your reserves at the central bank, and you look at the balance that you've been able to come up with for your balance of payments account. And if those two numbers don't match, then you have to introduce an item in the errors and omissions field to balance the change in your reserves with what you've been able to quantify in your balance of payments account. And that errors and omissions item is scandalous in Trinidad and Tobago. That errors and omissions item has amounted to a loss of 5.15 billion US dollars over the last 3 years in Trinidad and Tobago.
So that's unaccounted. Essentially, it's
exactly. We don't know where it went.
It's money that's not accounted for. Exactly.
We don't
it's
know.
Not. It's not reconciled.
How come nobody is talking about the fact that in 3 years we've lost 5 billion US dollars and we don't know where it went?
$5 billion is, just to put this into context, right now your total foreign reserves are just below 7 billion, right?
Yeah.
Okay. Yeah. And the Heritage and Stabilization Fund, I believe, has a balance of 6.25.
Yeah.
So 5.15 billion is
huge.
Certainly a substantial amount.
It's huge. And in 3 years, we've lost 5 billion US dollars, and we don't know where it went. It did not go through the banks via wire transfer, otherwise it would have been accounted for. It did not go through, like people like to talk about people who want to import too much Johnny Walker, or they want to buy a house in Miami, or they go on too many trips. All of those flows get accounted for in the banking sector via credit card payments, via cash sold by the banks, and via wire transfers and so on. 5.15 billion US dollars left Trinidad and Tobago, and we don't know exactly how it left and where it went. And I don't understand why that is not. I mean, to me, that is obscene and scandalous. And we don't hear the policymakers at all even acknowledging this as a problem.
Okay. You already talked a little bit about reserves, but the one thing I wanted to get into a little bit further was the Heritage and Stabilization Fund. And I recently heard you talking about the government was actually borrowing to save. And so I'd like to just hear you just tell us about that a little bit. What do you mean when you say the government's actually borrowing to save? And you know, what do you see that's going on with the Heritage and Stabilization Fund? Is this something that's actually, you know, building up and continues to build up, and you see as a serious buffer for the future? Is this something that potentially is going to run out pretty soon?
Well, in terms of borrowing to save, there have been years where we've incurred a fiscal deficit, but still there was a transfer to the Heritage and the Stabilization Fund. But the thing about that is that the way that the formula works is that the Heritage and Stabilization Fund, you have to deposit into it once your revenue from oil and gas, for example, is in excess by a certain amount versus what you've budgeted, right? And so I don't know that it's really up to the discretion of the Minister of Finance to continue to save in the Heritage and Stabilization Fund, even though you're incurring a deficit. For sure, it happened under the last administration, and we've accessed the Heritage and Stabilization Fund twice in the last 4 years, totaling of about 637 million US dollars in order to help finance the budget deficit. Now the fund is 6.25 billion US dollars, and that's about 600 million US dollars compared to where it was in September of 2015. I think it's commendable that we have a Heritage and Stabilization Fund. I think it's commendable that the asset manager has been able to get these kinds of returns. But you know, it's not sustainable that we continue to run deficits and tap into the Heritage and Stabilization Fund for the financing of these deficits. I don't think that that's a prudent approach at all.
Okay, and the fund itself is built up because of the oil and gas sector, is what I understand. Now, one of the things that the minister said was that he was talking about the Ryder Scott reserves audit from 2017, and one of the figures that he mentioned was that that the proven reserves increased from 9.92 trillion cubic feet in 2016 to 10.52 trillion cubic feet in 2017, thereby extending the life of our natural gas reserve pool to 14.6 years. What does this mean for the Heritage and Stabilization Fund? That in 14.6 years, there's essentially a possibility that there will be no further contributions, and it'll just be using it.
I mean, the thing is, there's no contribution unless you have a windfall. So that's what I was saying earlier when I talked about why is it relevant, apart from the fiscal rule surrounding the Heritage and Stabilization Fund. How is the oil price relevant? Because once the budget is predicated upon a certain oil price, if the actual oil price is higher by a certain quantum, there's a formula that prescribes what the contribution to the Heritage and Stabilization Fund is supposed to be. Now, it doesn't matter too much where the overall fiscal deficit is. And in terms of your question around when the oil and gas runs out, what's happening to the Heritage and Stabilization Fund? So long as the Minister of Finance continues to predicate the budget revenue on a certain oil price, and the oil price falls above by a certain quantum, then we still have to save in the Heritage and Stabilization Fund according to the fiscal rule. And this is what I was trying to get at earlier. That context has changed. And I feel like we need to revise the fiscal rules around the Heritage and Stabilization Fund. And furthermore, there was supposed to be a split of the Heritage and Stabilization Fund where you have a heritage component and a stabilization component. So the stabilization component is where you're allowed to access the fund to smoothen out your expenditure when there is a collapse in commodity prices. It is not supposed to be the case that we are supposed to be able to access all of it when, for example, as you alluded to, when the commodities have been depleted. It's not the case that we're supposed to be able to access that fund in order to keep expenditure at a certain level. So I think the whole structure around the Heritage and Stabilization Fund has to be relooked because the context has changed and will continue to change in light of not just Petrotrin, but as you mentioned, 14.6 years, 15 years, there may not be any more gas. So I mean, while I'm happy that we have a Heritage and Stabilization Fund, and we haven't really, yes, we took 637 million US from it. It's not like it hasn't crippled the fund, and I'm happy about that. But we have to safeguard that fund going forward, and we need to find a way to safeguard that fund.
Marla, I wanted to ask you about the credit ratings as well, because the minister said he was referring to some of the achievements, and he talked about the maintenance of positive credit ratings by the international ratings agencies, ensuring that the country remains attractive to investors. What are you hearing from the credit ratings agencies? Could you just give us some of what you're seeing there?
The way that he couched this, by way of example, we have achieved maintenance of positive credit ratings by the international credit rating agencies. What does he mean by positive credit ratings? We were downgraded by Standard & Poor's this year, and we are one notch above junk according to Standard & Poor's. But according to Moody's, we've been at junk for a couple of years well. So I don't understand how, and again, I go back to, this is a gross misrepresentation of the reality. This is not a positive credit rating whatsoever. Being downgraded is not positive. And so I am at a loss to explain why he would call this a positive credit rating and to use the word achieve. No, we suffered a downgrade. Let's call it what it is. And I think that it's only a matter of time before S&P matches Moody's in terms of downgrading us to junk, because they cited things like, well, the usual fiscal balances, external balances, execution of important reforms such as the Revenue Authority, the amount of debt that is raised, and all of those metrics. Generally, in an election year, there is little or no improvement on fiscal balances, right? There is usually deterioration, and as we mentioned earlier, this is a 30-something% wider fiscal deficit this fiscal year compared to last year's. That's a deterioration on fiscal balances. That's a ratings negative generally, and not positive. As we mentioned, we talked about the fact that reserves at the central bank, foreign reserves, have been declining every year as a result of a deficit on the overall balance of payments. That is likely to continue. That is a ratings negative. And so my outlook is that we are certainly not going to see any upgrades anytime soon. And I quite expect in the next 18 months to 2 years, I quite expect to see another downgrade from Standard & Poor's.
All right, Marla. Well, on that note, I think that we'll start to bring it to an end. So thank you so much for sharing those thoughts. Do you have any other final comments that you'd like to leave us with?
No final comments, except let me just say one more time that this budget was replete with misrepresentations of the truth, and it was a truly disappointing presentation from that standpoint.
Marla, thank you for sharing your insights with us today. You can receive Marla's publications on the economy of Trinidad and Tobago, as well as other top economies in the region, by subscribing at marladukharan.com/monthly report. Don't forget to subscribe to the podcast if you found Marla's insights useful today. Thank you for listening.